Great. With that, we'd like to bring up Mark Rockefeller, CEO of StreetShares.
All right, I'm going to try something here a little bit different. I'm not wearing a jacket, obviously, so I guess I'm the startup guy. My company is less than 3 years old, so we've just started, and I want to walk you through a bit sort of what our approach to this new industry was. The two biggest events in my lifetime were 9/11 and the financial crisis. And my personal journey was shaped by both of those. After 9/11, I served in the military for 9 years. I got out, thank you, I was working at a Wall Street law firm, and the Jobs Act passed that Brian was talking about. As a lawyer with sort of a legal eye who can understand the implications of these things, looked at that law and said, this is big. This might be the biggest change in the US securities laws since probably 1940 or so. So I was very, very excited about the potential in that law. My thinking was that if you brought together, as Ron described, sort of borrowers on one end and lenders on the other, and you could do it through this very efficient app, what else could you do with that community? That is, how could you match those borrowers and those investors in ways to then optimize that investment? And so that's what we set out to do. So, flew up this morning from Washington, D.C., a lot going on in that town currently. And it reminded me of another conversation that took place there about 100 years ago. J.P. Morgan, John Pierpont Morgan, famous financier, of course, was on Capitol Hill, and a Washington, D.C. lawyer asked him, Mr. Morgan, what is the key to offering credit? Is it cash, or is it collateral, right? Is it the cash that the borrower is going to use to pay you back, or is it the collateral that you can secure your loan against? And Morgan said, neither. He said, it's character, right? Now, to us, that seems, I think, kind of antiquated, right? We're in a world now of big data and algorithms and finance, and there's a bunch of experts in those things here in this room. What we've tried to do at StreetShares is create a bit of that trust, find ways to basically match borrowers and lenders by shared communities that will then increase that trust, increase the sense of duty or obligation that the borrower feels to pay it back. And then we take that as a layer after you've optimized everything else on the financial plane. It's a layer then that goes on top of that and can be used to improve the performance of that loan. So for us, it's all about trust and creating communities of trust where folks can lend to each other. In our case, we began with military veterans. So we do loans right now to military veteran-owned small businesses, and the capital for those loans comes from primarily other military veterans or people who support the military community. What we do is we make sure that the veteran understands that. They understand that on the other end of this loan isn't some distant monolithic bank. If they don't pay it back, they're not hurting the man. If they don't pay it back, they're hurting people who are like them, right? We found that drastically improves the performance of these loans. And I'll cover those numbers here in a minute. Three quick distinctives on StreetShares. Number one, the idea again is to harness social loyalty, beginning with the veterans community. To have those members, so we have borrower members, we have lender members or investor members, have them interact in ways that will optimize that sense of duty or obligation for the payback. And then a focus on retail investors. I'm a big fan of Dara's, a fan of Ron's. I'm a client of Brian's, and look forward to getting to know Jim and Todd as well. I suspect I'm probably a future customer of yours if this trend continues. Dara has been a tireless advocate of the retail investor in this space, right? What has happened is this new industry has emerged in the wake of the financial crisis, and hedge funds are all looking for yields, right? And so what has happened over the last several years is that the retail investors have been pushed out of this industry because the yields are good and the hedge funds want it all. Dara has been one of the tireless voices to keep the retail investor in the model. We're that way as well. We're sort of, I guess, retail investor purists, because for my social affinity model to work, I need, flesh and blood, human being, retail investors on the other side. Very quick snapshot of StreetShares. We launched our beta in 2014, located outside of Washington, D.C. about $9 million in equity, $200 million in lending capital. 26,000 members. I think the last time that I gave this presentation was in July to a bunch of bankers, and the number was 17,000 then. So very solid growth. We're growing on average about 30% quarter over quarter, which is, sounds impressive, but for a startup of my size, you better be growing that fast. About 800 loans that have been made so far. This idea of affinity groups we don't think is limited to veterans. We started there because it's a very tight affinity group. It's one in which I have personal credibility. I'm a veteran. We know those organizations and so forth. But we think that this can be expanded to other affinity groups as well, and I won't quite tell you what they are. But we've got a few coming, I think, down the pipe. And then loan terms and performance, just to give you an idea of what this looks like. We do small business loans and lines of credit up to $100,000. If you don't come to us, you may try and go to a bank, but they're not going to lend you amounts that small because it's too costly for them to do. Right? It costs them the same to underwrite a $50K loan or a $500K loan, so they just do those big ones. Or you get a credit card, or you go to some very, very pricey online lenders that, in my view, frankly, are predatory. Right? We try and create an alternative with our interest rate that is below a credit card, but it's a term loan between 3 and 36 months. So as a lender, your payback comes fairly quickly. Average rate that we charge right now is about 18%, and the charge-off rate, look at that, less than 3%, right? Very, very powerful, right? Part of this is self-selection. Part of this is we have good credit models, but part of it is this sense of duty and obligation that comes with this community. A couple of anecdotes. We had a borrower that got behind in their payments, was having trouble paying. Usually we'll reach out to them and say, what's going on? Let's create a plan. Let's find some way to solve this. In this case, they weren't responding to anything that we did. We had one of the veterans on our staff, we have many of them, write them a letter. Okay, there's a handwritten personal letter. And it basically said, listen, vet to vet, you took out this loan, and these are the 37 people who backed this loan, right? Fellow veterans. That borrower called us, apologized, and cured, right? That's the kind of behavior that banks never get, right? And it's because we're tapping into the human side of lending, to that loyalty that exists between populations of individuals. You can only do that, right, when the transaction cost is so low and so small that it's all done on a phone. You can only do it with a healthy retail investor population, like Dara's been advocating for years. But when you get those things, there's some very fun and very innovative things that you can do, like decrease the risk. Very quickly, how do we make loans? There we go. So it looks like that. It's all on the app. It's all mobile. It's all paperless. Application takes about 5 to 7 minutes. Instant pre-approval. We then tap into tax records, savings accounts, bank records, all of that electronically, and serve all of that up in a nice automated interface for our underwriters. So there's a human underwriting this thing, of course. It's not a robot. And they get the money in about 1 or 3 days. Very, very attractive product to the borrowers. On the other end of it, where's the capital come from? Well, it comes from a combination of, that was it. Yeah, that was 17,000 members. That was a couple months ago, so we've almost doubled. Accredited institutional capital. Right now they're getting about 11 to 14% net yield after losses and impairments. And then non-accredited retail investor capital. So that's what Brian and I worked on. Really kind of fun to basically invent a new kind of security with the SEC. You get a talented lawyer like Brian. We have some friends at the SEC that we built some friendships going through this. Lots and lots of back and forth. But they were actually fairly open to it. And they helped us because they saw the intent of the law. They saw what was supposed to happen. We just came along and tried to use it in a way that I'm not sure they expected. But it worked out. And together we invented, in essence, this new kind of security. We are branding this the Vet Biz Bond, right? It's a veteran business bond. And the idea is it's a 5% fixed return. And so in essence, we are borrowing from the public at 5%. We're keeping a provisioned fund off to the side to account for any losses. And then we're lending that out to veteran-owned companies at about 18, covering all of our losses and making sure that the lender gets 5. So for accredited folks, as Brian mentioned, You can be a part of the institutional accredited capital pool in which you're going in and investing in particular loans. For the non-accredited side, it's this 5% vet biz bond product, which is much, much better than folks are getting at their savings account. And more importantly, the money is going toward a cause that you care about, right? I've always been fascinated about ways to finding ways to do good and do well, right? It just seems like it's a very difficult thing to do, and we think that we're onto something here. What we do right now is limited to lending and investing. So in a way, we kind of behave like a bank, right? We're sort of taking money from the public, and we're making loans with it. But you're not depositors. No treasury management services, nothing that really competes with the bank, which actually means that we can actually work quite well with the banks. That is my information. If you're interested in what we're doing, in partnering with us in any way, I would love for you to reach out. M. Rockefeller at StreetShares, or actually just Mark at StreetShares as well. I want to end real quick. I'm going to skip this. This is VJ Day. So this is 1945, the end of World War II. Ticker tape parades, sailors kissing nurses, all kinds of fun stuff going on. A generation left the military, right, and came home, and one study out of Syracuse found that 49% of them went on to own or operate a business, right? That was back then. But look at what they had in terms of bank support. That would say that vets came home to start businesses fueled by access to capital. 13,000 banks and growing at the time. Community banks, small, local, in the neighborhoods, had a relationship with these business owners. This is my generation of veterans. Half the number of banks and declining, right? Bank consolidation, too big to fail, all of these things remove that bank from Main Street, right? The bigger they get here in Manhattan, the smaller they get out there in Main Street, right? And so those veterans then don't have access to it. What they do have access now through the phone is all of us, right? And all of you, right? And this network now that can come behind them. So I believe that great companies have a great mission, and this is our mission. Good returns, and doing good for the world as well. So I think we can all win. So anyway, thank you for your time. Appreciate it.